Hello everybody, in this short video I will discuss how COVID-19 is affecting the political economy of the European Union. COVID-19 is having huge economic repercussions, as we know. 2020 will certainly be a recession year for most countries in the world. As a consequence of lockdowns, many economic activities are closed. Restaurants, the tourist sector, the aviation sector, shops of any kind. And countries all over the world have intervened to sustain these economic activities and to sustain the people who are working in these affected sectors. And countries did it through a number of economic initiatives. They gave people cash transfers. They used a welfare mechanism. They used social insurance mechanisms. They processed a greater than ever number of unemployment claims. But this, you can understand, costs money. And it's money that, with the production falling, with the GDP falling, with the revenues falling, it's money that states need to find somewhere. At this stage, what did governments do to find these resources? Here I'm focusing mainly on two types of responses. First, central banks have been buying government debt in the form of government bonds. This is what the Bank of Japan, the Bank of Canada, the Federal Reserves of the United States, and many other central banks have been doing in the last few weeks. This has helped to keep the cost of government borrowing relatively low. The Bank of England, that you can see somewhere behind me, announced £200 billion of government purchases. Second, governments have enacted sizable fiscal stimulus. The US Congress passed trillions of dollars in fiscal programs. The UK government unveiled in March a £350 billion rescue package to support the economy. These governments are borrowing this money from financial markets. This, of course, will widen the fiscal deficits and increase the public debts of these countries. What about the European Union? What about the Eurozone? The Eurozone is a subset of European countries, 19 countries, that all share a common currency, the euro. So on the one hand, the European Central Bank, the ECB, has announced a large purchase program, value €750 billion, which allows the ECB to buy the government bonds of European states. And it is pretty much in line with what other central banks did. What about governments? And that's where things have become more controversial and more complicated. European Union rules on deficit are suspended. In normal times, European Union governments have to respect certain parameters. They need to have balanced budgets, which means strict limits for doing deficit. Of course, these rules have now been suspended, and European states can run as large deficits as they want. And yet, the public debt situation in Europe is different, and it varies from state to state. There are some countries like Germany that have very low public debt. Other countries like Italy or Greece with much higher levels of debt and therefore with much less fiscal capacity. What these countries fear is that one, markets will ask for higher interest if they're going to buy the bonds of Italy and Greece. And two, after the crisis, these countries will be left with an even higher public debt. So, for instance, Italy has now public debt of 135% of the GDP, and after the crisis, the public debt will probably be 160, 170% of its GDP. So, there are two main coalitions in Europe at the moment. The first coalition is a coalition of southern member states, Italy, Spain, Portugal too. These countries have been saying Europe should show solidarity. We are all part of a common economic and monetary union. So what they've been proposing is to find an EU fiscal response to the crisis, to the COVID crisis. There are different proposals here, and basically, I'm simplifying a little bit, but basically this proposal run around the idea of creating an EU-wide deficit. So not really national deficits, or not just national deficits, but also or only a common EU deficit. On the other hand, and this is the second coalition, countries from Northern Europe, and led by the Netherlands and Germany, have been much more hesitant to do so, and have much more hesitant to pay altogether the cost of these deficits and the cost of the responses to the COVID-19 crisis. They've been saying that each and every country basically has to rely primarily on its own resources to respond to the crisis. Now, and I conclude, Ministers of finance of all the 27 member states and prime ministers of all the 27 member states have been discussing and negotiating these issues in the last few weeks. Online meetings, of course. There have been some possible solutions, some ideas, some compromises, but these debates are only the beginning and will continue in the coming months. Please follow them closely. Many commentators, in fact, believe that the outcome of these discussions, the outcome of these negotiations, will determine the future of Europe, the future of the European Union, whether the European Union will survive or not, and will determine the future of politics on the European continent. I hope you enjoyed and stay safe.